Hey everyone, welcome back to the channel where we break down the big economic stories impacting American investors and Wall Street portfolios. Today, we're diving deep into one of the most dramatic corporate turnarounds in tech history, Nokia. From the undisputed king of mobile phones in the early 2000s to a near-death experience in the smartphone era, and now reinventing itself as a powerhouse in AI-driven networks and 5G infrastructure. If you're invested in tech stocks or looking for undervalued plays in the AI boom, this is a must-watch lesson in innovation, failure, and resilience. Let's start at the peak. Nokia wasn't always the telecom equipment giant we know today. Founded way back in 1865 in Finland as a paper mill, the company evolved over decades into rubber, cables, and eventually electronics. But it exploded onto the global stage in the 1990s with mobile phones. By the early 2000s, Nokia was the world's dominant cell phone maker. At its height in 2007, it controlled over 50% of the global mobile phone market. We're talking billions in sales, annual revenues topping $110 billion at one point. Iconic models like the Nokia 3310 became cultural legends, indestructible, with that unbeatable snake game, and the classic ringtone that everyone recognizes. Nokia's stock on the NYSE, ticker NOK, was a darling for investors. Its market cap soared past $250 billion in 2000 during the dot-com bubble, making it one of the most valuable companies on earth. For American shareholders, it felt like owning a piece of the future. Nokia powered the mobile revolution, enabling the first GSM calls and dominating emerging markets. It wasn't just phones, it was infrastructure too, laying the groundwork for global connectivity. Finnish pride aside, Nokia single-handedly boosted its home country's economy, employing tens of thousands and driving GDP growth. But then came the fall, and it was brutal. In 2007, everything changed. Steve Jobs unveiled the iPhone, revolutionizing what a phone could be: touchscreen, apps, an ecosystem. Google followed with Android, an open-source platform that was free for manufacturers. Nokia, stuck with its outdated Symbian operating system, dismissed the threat. Executives called the iPhone a niche product. They were wrong, catastrophically. By 2010, Nokia's market share in smartphones plummeted from around 40% to under 30%. Samsung and Apple surged ahead with better hardware, software, and app stores. Nokia tried partnerships, like with Microsoft on Windows Phone, but it flopped. Leadership missteps piled up. In 2011, CEO Stephen Elop, poached from Microsoft, wrote an infamous memo comparing Nokia to a burning platform. He pivoted to Windows, alienating developers. Sales cratered. From controlling half the market, Nokia's phone division share dropped to less than 3% by 2013. The company lost 90% of its market value in just 6 years, dipping below $10 billion at its lowest. Thousands of jobs vanished, over 25,000 layoffs. In 2014, Nokia sold its entire mobile phone business to Microsoft for $7.2 billion, a fire sale that Microsoft later wrote off billions on when Windows Phone failed. For US investors, it was a stark reminder: even giants can fall. Nokia's decline mirrored others like BlackBerry or Blockbuster. The lesson? In tech, complacency kills. Failing to innovate on software and ecosystems turned a monopoly into irrelevance overnight. It wiped out fortunes and highlighted the risks of disruption in fast-moving industries. Fast forward to today, December 2025, and Nokia is far from dead. In fact, it's thriving in a completely different arena. After ditching consumer phones, Nokia refocused on its core strength: network infrastructure. Selling the handset business allowed it to pivot to B2B telecom equipment, building the backbone of 5G and beyond. As of now, Nokia's market cap sits around $35 billion, with shares trading on the NYSE. Trailing 12-month revenues are about $21.6 billion. In Q3 2025, the company reported strong growth. Comparable net sales up 12% year-over-year to around €4.83 billion, driven by demand in optical networks and AI-focused data centers. They beat profit expectations, with comparable operating margin at 9%, and upgraded full-year guidance to €1.70 to $2.2 billion in operating profit. What's fueling this comeback? The AI supercycle. Hyperscalers like Google, Amazon, and Microsoft are building massive data centers that need ultra-fast, reliable connectivity. Nokia excels here with its network infrastructure segment, IP routing, optical transport, fixed networks. The acquisition of Infinera earlier this year supercharged their optical business, tapping into AI-driven demand for high-speed data transfer. Then there's 5G and beyond. Nokia is a leader in radio access networks, RAN, powering deployments worldwide. But the real excitement is AI integration. In October 2025, Nvidia invested heavily in Nokia and partnered on AI RAN, running 5G/6G software on Nvidia GPUs for smarter, more efficient networks. This positions Nokia at the heart of 6G development, where AI will make networks self-optimizing and adaptive. At their Capital Markets Day in November 2025, CEO Justin Hodder laid out an ambitious strategy: lead the AI-driven transformation of networks. They're restructuring into two main segments starting 2026, network infrastructure, targeting 6 to 8% CAGR growth through 2028, and mobile infrastructure. Long-term goal? Comparable operating profit of €2.70 to €3.2 billion by 2028, a massive jump from recent levels. Nokia is also expanding in the US, announcing billions in R&D and manufacturing investments for AI-ready networks. Partnerships with cloud giants are booming. 9 of the top 10 hyperscalers use Nokia tech. Enterprise sales hit records, with private 5G networks for factories and campuses. Even defense, they're incubating secure connectivity solutions for Western allies. Financially, Nokia is solid. Net cash balance around €3 billion, strong free cash flow. They're ethical too, named one of the world's most ethical companies multiple times. Bell Labs continues innovating, with recent Nobel-level breakthroughs. For American investors, Nokia stock looks like an undervalued bet on the AI infrastructure boom. Think of it as the picks and shovels play. While Nvidia sells chips, Nokia builds the networks that connect them. Risks exist: competition from Huawei, banned in many Western markets, Ericsson, and cyclical telecom spending. But with AI data centers exploding and 6G on the horizon, Nokia's pivot could deliver big returns. Nokia's story is the ultimate economic parable: dominate early, adapt or die, then reinvent. From paper mill to mobile king to AI enabler, it's proof that companies can rise from the ashes if they focus on what they do best. What do you think? Is Nokia a buy right now? Drop your thoughts in the comments. If you enjoyed this deep dive, hit like, subscribe, and turn on notifications for more market moving analysis. Thanks for watching, see you next time.